We mentioned yields. They actually edged lower in today's session as well. The Chartmaster sees an opportunity for a pairs trade in two of the most rate-sensitive areas of the market, REITs and utilities. Carter's over at the plasma. Carter, what do you see?
Yeah, you bet. So 2-year yields lower, of course, 10-year. And these are, of course, the two most rate-sensitive areas of the market. And you're looking at a comparative chart over 5 years. And to my eye, we're going to get some convergence. You've got utilities in blue. You've got iShares ETF, which measures REITs, in orange. Let's look at this not as a comparative chart, but as a relative line, one line. And so what you're going to see here is this is simply one divided by the other. That's how you depict relative strength. IOIR's relative performance to XLU, which is to say REITs underperforming, 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 and then now starting to put in a double bottom, which warrants a green arrow. Another way to look at it would be as follows. Put in a trend line. It's the same thing, right? So not only do we have the double bottom, just today we flirted with a breach of the downtrend line. I like this a lot, and I think it's a very safe way to play. Remember, pair trades, in many ways, if you get them right, it's nirvana, right? It's as least risk you can embrace by taking still a bet.
Or you could be wrong on both sides, which, of course, is
not nirvana. The opposite of nirvana
is absolutely devastating.
No, what do you think?
I like where Carter's going here, and I think if you look at both REITs and utilities, the most extreme part of those down moves and this underperformance when rates were moving higher was really late summer. So it was kind of July into the bottom that I think we hit somewhere in October, and from that point, they both behaved pretty well. And I think we're in an environment where utilities are going to be actually quite defensive next year, or this year, I should say. So I think I like the trade, though, when you consider that there's still going to be some outperformance and that we've had an extreme move in interest rates, and I don't think we're going to see that kind of a move over the next 2 to 3 months.
In fact, Carter was now back at the desk.
When he ran off, I thought he was getting sick. People don't get a chance to see that, but when he ran, I didn't know what was going on.
He's got his trainers on. You think rates overall going lower, actually?
Oh, yeah. For sure.
You say, oh, yeah.
I mean, I do. That's what I think. Does that have to be right?
What does that do for your trade?
What does that do for this trade?
Yeah.
Well, so here's the thing. The bet, of course, is street-wide, is that the lower rates mean higher stocks. Why is that? That doesn't have to, it's like the lower dollar was supposed to be good for stocks. The dollar's collapsed and the stocks haven't done anything. These relationships are spurious. They're made up. Sometimes they're true, and sometimes they're not true at all.
Yeah. Courtney, do you like REITs or utilities?
I do, and actually, I do agree. I think probably rates are likely going to come down at some point this year, which should benefit REITs, because really that's been one of the things that's been offsetting it the most, is with rates higher, especially with like your residentials. That's really what's been keeping it down. But I think a lot of that is going to come off the table here.
Yeah, I agree, and especially that it's broken that downward trend line. That's pretty important, and it's pretty convincing when you actually take a look at it. So I would go REITs over utility.